Hi, my name is Kanwal Sarai. In this video, I'm going to show you how to avoid investing in overvalued stocks or stocks that are priced high, and help you from making expensive investing mistakes. I'm going to show you how to do this by looking at a company's PE ratio. I will also show you how to calculate the PE ratio, where to get the PE ratio, and what's the right PE ratio to look for when you're investing in stocks. Stock prices go up and down all the time. And in this example, you can see that the stock is overvalued or priced high when it's close to $150, and it's priced low when it's closer to $100 per share. You've heard the phrase buy low and sell high, and that's where you're going to maximize your profits. There's no point in buying this company at $150 or even at $140 a share. So how do you know when a stock is priced high or when it's priced low? To help you figure that out, we are going to look at the PE ratio. The price to earnings ratio is simply the share price divided by the earnings per share. In this example, the share price is $30 a share and the earnings per share is $3. And you can see that the PE ratio is 10. What this means is that for each share, you are paying 10 times what the company earned. Let's take a look at two examples, Company A and Company B. All things considered equal, you can see that Company B shares are a lot more expensive than Company A's. Now let's take a look at how you can calculate the PE ratio yourself. As you've seen before, the formula is quite simple. It's the share price divided by the earnings per share. So let's take a look at the screen on the right-hand side. We're going to use Yahoo Finance, but you can use Google Finance or any other website that gives you stock quotes. So you can see here that Walmart's share price is $131.95, and the earnings per share is listed right here at $4.75. When we put that information into our formula, we can see that the PE ratio is 27.78. The good news is that you don't have to calculate the PE ratio yourself. Again, if we go to Yahoo Finance, you can take a look at the site here. The PE ratio is listed as 27.78. So you can very quickly get the PE ratio for any stock that you're looking at. Now let's take a look at a real life example with two companies, Harley-Davidson and Polaris. Now just looking at the stock price here, you would assume that Polaris is a lot more expensive than Harley-Davidson. But let's take a look at the PE ratio for each of these companies, and that's listed right here on the screen. All things considered equal, you can see that Harley-Davidson is in fact much more overvalued than Polaris is today. What's the right PE ratio to look for? Personally, I like to look at companies that have a PE ratio of 25 or less. There might be some exceptions, but as a general rule of thumb, 25 or less is a good number to start with. Does this mean that you should go out today and buy any company with a PE ratio of 25 or less? The answer is no. There's a couple of more things to check before you go out and invest your hard-earned money in any stock. I like to use the 12 rules of simply investing. If a company fails even one of these rules, I skip the company and move on to something else. And you can see here that the PE ratio is just one part of the 12 rules of simply investing. Ideally, you want to make sure that before you invest in any stock, that the stock passes all of the 12 rules that are listed on the screen here. The rules are also available on my website, and you can see the URL right here. In the online Simply Investing course, I go into more detail about these rules. I also provide you with real-life examples, and the course comes with a spreadsheet that you can use to apply these 12 rules to any stock. To see more videos like this in the future, please subscribe to my channel. Thanks for watching.